I welcome you to the YouTube channel, The Executive Outcomes. My name is Michael Mwansaliova. We are going to look at financial accounting in relating to source documents and books of prime entry. The presentation outline is as follows. We are going to look at source documents, then look at the role of source documents, and talk about books of prime entry, and then look at the journal. Source documents. The source documents are those documents where the information to be written in the books of accounts are obtained from. So these are documents from which transaction details are transcribed into the books of business. Among the source documents, the chief among them include receipts. Receipts are simply an acknowledgement of cash that has been received by a business. They are used in a cash transaction. We also have correspondence. This is used as documented evidence for either cash or credit transactions used in the business in the absence of formal receipt and an invoice. Finally, we look at invoices, another source document. For invoices, these are indicative of suppliers' demand for payment of goods and or services. These are used in credit transactions. Role of source document. In the event of a business transaction involving sale or purchases, or receiving or paying money, or owing or being owed money, a document records the transaction. These are the source of information recorded by the business into accounting books, such as sales invoice, purchases invoices, cash sales or cash purchases, debit and credit note. Books of prime entry or books of original entry, or otherwise known as books of first entry. From the source document, the information first hits the following main books of prime entry. 1. We have the sales day book or sales journal. This keeps a record of all goods sold on credit for profit purposes. Source document in this case, as we have already heard, is a sales invoice. 2. We have sales returns journal or returns inwards journal. This keeps a record of goods previously sold on credit but have been returned by the customer. The source is the credit note. Number 3, we have the purchases day book or purchases journal. This keeps a record of all goods bought on credit from suppliers meant for resale to make a profit. As we have seen or heard, the source document is a purchases invoice. 4, we have purchases returns book or returns outward journal. This keeps a record of all goods previously bought on credit but have been returned to the supplier. Number 5, we have the cash book. This is another book of original entry that records transactions involving cash. By cash, we include transactions involving checks. Number 6, petty cash book. This is another book of prime entry, which is a subsidiary of the cash book. It keeps a record of small items of expenditure in business, e.g. milk, snacks, where the payment using other means might not be convenient. Let's talk about the journal. This is a record of all other transactions not recorded in the other mentioned books of original entry. That is, sales purchases, correction of errors, writing of bad debts, opening and closing entries, including depreciation, are some of the things that you are going to find in the journal. So this is why we have to come to an end for this presentation. Thank you for listening. Don't forget to subscribe to the channel and like the video.